what happens for the economy as a whole is then they print the money because they don't want defaults. There's a tolerable amount of defaults, and then you get past a tolerable amount of defaults and it just crushes everything.
Ray Dalio is a man who invests based on the big picture of trends in the world economy. And right now, he has a big warning that all of us should be paying attention to.
This thing with the bank is not a Silicon Valley Bank loan issue. It's not a banking issue. It is a global issue in terms of all around the world, all sorts of entities, pension funds, insurance companies, all around the world. There was a lot of the buying of these government bonds, which have gone down in value. And if you then take it and you say, what's the value of those? Those have gone down. And the cost of money is high. And so the world is leverage long, okay? Long, meaning they own stuff, and they borrowed money to own it, and it's going down in value.
In 1971, the US dollar was a piece of paper, like a check, that didn't have value on its own, but could be exchanged for gold. Still, the US was printing more money than it actually backed with gold. And by August 15, 1971, the gold reserve was on run out. Dalio happened to be a clerk floor working the New York Stock Exchange when then President Nixon declared that no more dollars were going to be exchanged for gold again. This was literally defaulting on one's promise. Dalio thought the stock market was bound to crash at that moment, as it was such a huge economic crisis. He was surprised, however, as the market didn't fall, but rather rose. He dug further into history and discovered that a similar event had occurred on March 5, 1933, when President Roosevelt made a similar announcement. The United States abandoned the gold standard and printed out reams of money. Eventually, things turned out fine, not in a market crash. Dalio realized that although such events may shock, they had happened before. Just because it had not happened during his lifetime did not mean that it was the first time ever. This lesson helped him read the Great Depression in depth, and the knowledge he acquired about it helped him predict the 2008 financial crisis. Indeed, during the 2008 crisis, he used his knowledge of economic history to invest profitably.
Okay, so what happened? The government had to sell a lot of debt. And when it sold a lot of debt, there were a lot of entities that bought a lot of bonds, government bonds. And money was very easy, which meant that short-term interest rates were very low. And money was actually being given away because they had interest-only loans and interest rates were less than 1%, and you didn't have to pay back principal. So you could go get money. And so that created a lot of debt, and it created a lot of buying of government bonds. So what happened to Silicon Valley Bank is what happened to many entities all around the world, not just banks. They what does a bank do? A bank takes in deposits, typically, or debt in some way, and then it buys debt. It can do that in the form of making a loan, or it could do that in the form of buying a government bond, buying debt. And then when interest rates went up, the value of that debt went down. The money they had to give to depositors became more and more expensive. And also depositors, wanting them to be competitive, looked at money market rates or other rates and withdrew money from the bank because they had better uses.
Dalio points today to three major trends that have yet to occur in most people's lifetimes, but were last witnessed between 1930 and 1945. The first is the heavy printing of money. Like during the COVID-19 pandemic, stimulus checks were issued far beyond what was used in compensation for losses. Where did the money come from? It was borrowed by the government from the Federal Reserve, which printed money for buying the debt. Folks liked the checks, but when all the money circulated, inflation ran wild. Dalio explains that if the money supply increases by over 25%, then inflation is just unavoidable. The principle is simple. Anything's price is the amount of money and credit used to buy it divided by how much of it is available. The more money and credit are chasing the same goods, the higher prices will be. The second trend is an intensifying internal conflict in the United States. It is now experiencing its most serious political and economic divisions since the 1930s and 1940s. Conflict levels might be more profound than then, given current wealth gaps and high levels of political polarization. Dalio claims the United States is embroiled in a sort of civil war, populism versus resistance to losing. In the elections ahead, he says there is a realistic prospect neither side will accept defeat. Historically, the system faces danger when loyalty to cause surpasses loyalty to the system and people. Political tension, and it is growing, already threatens the rule of law and the Constitution. Physical separation, which Dalio warns might be the direction of people if the division deepens, will result in much more dangerous escalation.
The conflicts that were existing, and those countries were Germany, Italy, Spain, and Japan, because there's a lot of internal conflict over wealth, and when you have that. And so that creates a lot of internal disorder, a lot of fighting, okay? In some ways, almost civil wars forms everywhere, some form of civil war. Who wins the internal war? And of course, that happens also at the same time as there's the external conflict. So first of all, everybody's fighting over resources. You have populists come to power, and the populists are not compromisers the way democracies work.
The third major trend is a new global power, China and Russia among others, who are starting to challenge the US in new ways. Dalio likens that to the Allied and Axis powers during World War II. When a global power struggle emerges, the victors get to set the rules, and after World War II, the US did just that. In 1945, the US held 80% of the world's gold, controlled half of the global economy, and had unmatched military power, which allowed it to establish the post-war global order. Institutions like the United Nations, the World Bank, and the International Monetary Fund were headquartered in the US because it was the dominant power. But that world order is now changing. Therefore, the US spends more than it earns and covers the difference with debt and printing money. Meanwhile, its infrastructure keeps crumbling down to meet its future generations of debt and not all of its children with their proper education. For Dalio, the new Cold War is in the new global power struggle, and currently China and Russia have formed alliances to challenge this order. This competition is taking place on multiple levels, being fought on trade fronts, technology fronts, geopolitical fronts, capital fronts, and even on military fronts, as evidenced by Russia and Europe. To succeed in this world, Dalio says that a country must be sound on all these fronts. He himself advocates for bipartisanship and middle ground solutions, since he sees the threats of extreme polarization on the left and the right. This can be seen in the light of history that wars build up new rules and introduce peacefulness and prosperity, but simultaneously push inequality and wealth up, taking control of the scenario in turning into accelerating problems through wars and then economic problems by raising debt. Interestingly, Dalio points out that in the later stages of these cycles, it's often the wealthy who accumulate the most debt. One might expect the opposite, but as seen with the US, even as its per capita income was much higher than China's, it started borrowing from China. The irony is that poorer nations like China have a strong saving mentality and often invest in US assets, even when the US is heavily indebted. Dalio's understanding of these cycles helps him see that the world is currently holding a lot of debt, and many investors are comfortable holding assets like bonds, despite inflation. However, as inflation erodes the value of money, the question becomes whether investors will continue to hold these assets. If they start selling off en masse, interest rates will rise sharply, or the government will print more money, either of which could lead to serious economic consequences. He also points to historical examples, like the year of Jubilee mentioned in the Old Testament, where debts were forgiven every 50 years. This system was designed to reset the cycle, and Dalio suggests that similar cycles of debt buildup and reset happen throughout history. It's a pattern that we're likely to see again as the current global order continues to shift.
I went back and studied history, the last 500 years, on these cycles. There are big cycles that last about 75 years, give or take about 50 years, and of rises and declines. And I put that out because I think it's so important people understand that. I put it out in a book called The Changing World Order and in a free video called The Changing World Order. So when we look at each one of those, they're important. I also learned in studying history that there were two other influences that were very big, and you could see them. The first was acts of nature, such as droughts, floods, and pandemics, the changes over time in the evolution over time of people's learning and the technologies they make. So I'd say there are the really 5 big influences that drive everything, and they are the money and debt, economic influence, the internal conflict, the external conflict, the nature influence, and the, let's call it the technology influence.
He suggests that investors have a choice. They can hold on to assets even as their returns diminish, but the question becomes, what will they do when faced with declining returns? Everyone wants to be the first out when things start going bad, which is why it's crucial to be smarter in these situations. Dalio emphasizes that one can gain an advantage by keeping an open mind and recognizing things that others don't see. He believes that success lies more in understanding how to navigate the unknown than in relying solely on what one already knows. For him, the holy grail of investing is to find 10 to 15 uncorrelated streams of return. By doing this, an investor can achieve a better return without increasing risk. He explains that while picking one winner is difficult in a competitive market, diversifying into multiple good, uncorrelated investments significantly reduces risk. In fact, by holding 15 uncorrelated investments, an investor can eliminate 80% of risk and improve their return-to-risk ratio by 5 times. No single bet on an individual investment could improve a return by such a factor because of the unpredictability of markets. Dalio likens the current geopolitical landscape to family dynamics in history, where even members of the same family, despite being interconnected, can end up fighting one another. He refers to pre-World War II European royalty, where marriages between nations were supposed to ensure peace, but ultimately failed. Historical and current events show that even when nations are intertwined, conflicts still arise, and loyalties can shift. He also touches on the strained relationship between the US and China, which has evolved from the Obama era to the present, growing increasingly hostile under Biden and beyond. Dalio highlights the prisoner's dilemma between nations, where cooperation would be mutually beneficial, but mistrust leads each side to act defensively. This mistrust can make it difficult for nations to work together, and in some cases, they may preemptively act against each other to ensure their own survival.
If everybody's using the dollar in world trade, then you want to save in dollars, because you say, okay, now that's the thing I spend in, and I save in the dollars. But over time, as the share of world trade goes down, why aren't they denominating in like China has a larger share of world trade? Traditionally, the countries that have the world's reserve currency have the largest share of world trade and the largest share of world capital flows. And because the United States has declined, and also there's a worry about that, holding it because of sanctions. I mean, just imagine how the Chinese must feel about having a lot of money in treasury bonds. You know, like I would be worried that I would be treated like Russia would be treated. It's not something I would want to hold as a safe asset. And other countries who might feel that they can get sanctioned. And for all those reasons, they're less inclined to hold. And when we call dollars, what we're really calling is dollar debt, because you don't hold, you hold dollar debt. And that's what is a debt? It's a promise to receive currency.
Dalio believes China is in an advantageous position, watching how conflicts, like the one between NATO and Russia and Ukraine, and Israel and Palestine, unfold. He compares the current use of sanctions to similar measures taken before World War II, like when the US embargoed oil to Japan, ultimately leading to Pearl Harbor. Sanctions, in Dalio's view, are often a precursor to larger military actions. Having traveled to China since 1984, Dalio has built relationships with Chinese leaders and gained insight into their perspective. He notes that while China does not want war, the US-China relationship has become increasingly contentious, and both sides are wary of each other's actions. Dalio sees three major questions unfolding: who wins in the Ukraine-NATO conflict, how powerful sanctions really are, and how global alliances will shape up between East and West. He predicts that if Putin loses in Ukraine, he will escalate tensions rather than accept defeat quietly, likely using nuclear threats. Dalio also observes that nearly half the world, including countries like India, Brazil, and Indonesia, has either aligned with China and Russia or taken a neutral stance in the conflict, signaling a shift in global power dynamics. The world is moving towards a new era where ideologies, not just economics, play a dominant role in shaping international relations. He mentions the rise of nationalism and ideological battles within countries, such as in the US, where people are more willing to fight for their beliefs than work within the system. This growing polarization, according to Dalio, threatens the system of governance that relies on cooperation and compromise. In this environment, the traditional economic rules of resource allocation based on merit are becoming less relevant. Ideologies are taking control, and Dalio points to examples like the conflict between Florida Governor Ron DeSantis and Disney as a sign of this ideological shift. He warns that if people prioritize their causes over the system itself, the system is in jeopardy.
As we have an internal conflict taking place, such as the presidential election, so we're going to come into the presidential, and it's not just presidential election, of course, it's a number of senators, congressmen, and so on, and who are at each other's throats about this, and who are going to fight with each other, okay, and fight to win, not probably respect the rules as much, but fight to win for their side. And that's happening at the same time as we have the situation with China, most importantly, China and Russia, in terms of the issues, in terms of their things to fight over. You know, for example, even there's going to be an election in Taiwan that'll also have a big bearing on this whole thing. So there's, we know, I think, pretty much that we're going to have financial problems.
Dalio sees this happening within countries as well, with factions fighting for their beliefs, creating a win-at-all-cost mentality. This ideological conflict, combined with growing nationalism and the desire for self-sufficiency, is setting the stage for a new global order where cooperation becomes increasingly difficult. How do you see all of this panning out for us? Let us know in the comments below.